welcome to Strategic Growth Council, a podcast about strategic growth and mergers and acquisitions for the middle market. Our listeners are growing their businesses intentionally in a disciplined fashion, perhaps by acquisition, or they may be contemplating a sale. In every episode, I interview an expert in the world of strategy or growth or mergers and acquisitions. And today, I'm joined by Richard Jollon of the Sentinel Oak Group at Morgan Stanley. Welcome, Richard.
Thank you. Good morning.
Glad to have you. I'll apologize in advance. Those of you who are listening, you're probably listening a few weeks later than now. It's currently March 16th, the day before St. Paddy's Day, the day before the start of the real rounds of March Madness. I'm excited, and unfortunately, that time of year often brings a few sniffles. So you may hear a little bit of that. I'll try to avoid that as much as I can. Richard, it'd be great if you would share with our audience a minute or so of background about yourself.
Well, the first thing about myself is I'm super excited because my alma mater, Longwood, this is their first trip to the March Madness this year. Now, we have to play Tennessee, which I'm not sure I'm so excited about, but nonetheless, tomorrow should be an exciting day for us. So I'll lead in with that. Graduated from Longwood in Virginia, small school, and then went to work in the federal contracting arena. We helped, companies get their products and services added to federal, acquisition contracts. We work with manufacturers and vendors all across the country, actually all across the world, to help do that. And then I went out on my own with that business, and we were very successful. And the name of that business was GovMark. And we, during that business, I decided to go back to school and get my MBA. And then we got an offer for that business, and we took that offer. And at that time, I was pretty young. I still had a family. We were starting a family at that point, and needed to keep working. So the short story is I ended up at Morgan Stanley, and I went through what's known as their training program, and that was, the start of that was like 8 years ago now. Time flies. Because on the personal side, we have 4 little kids. So my oldest is 8, and I've got 2 4-year-olds at the bottom there. So we're busy.
I bet. I didn't know you were a successful entrepreneur in your own right. So that must have set you up well in your role with Morgan Stanley. I suppose not many of your peers and colleagues have entrepreneurial successes under their belts.
Success is a relative term, but I know what it's like to write a payroll check, and I think that does separate me from, I guess, a lot of people. And I know what it's like to stress over those types of things and be on the hook for the performance of an entity. So yes, that has helped me in this business be able to communicate with clients and understand where they're coming from. And kind of, I've been in their shoes. Yeah.
So you say you with your clients, you are, I don't know what term you would use, a wealth advisor, wealth manager. How does your work differ from what a stock brokerage firm does?
Yeah, I wouldn't say that a stock firm is separate from being a wealth manager. I think that, wealth advisory or wealth management is now part of the world has changed a lot. At Morgan Stanley, we serve some of America's wealthiest families. We serve, everybody from the mom and pop business up to that. And wealth management is a more holistic approach. So it's not just about, what stock you're going to buy, what, mutual fund you should hold or sell. It's more about looking at, the plan for your financial lifestyle, how you're going to get from point A to point B. And of course, for business owners, that's always very entangled with, their business. A lot of times they built it and a significant amount of their wealth is in that business. So I would say wealth management is really about trying to maximize the wealth equation, through a lot of different variables.
And you talk about the wealth equation, and the various variables. Does that relate to the mix of services that your firm offers? And
Yeah.
what are those services? What are those variables?
Yeah, no, that's a great question. Yes, it does relate directly to that. So one thing we already touched on was kind of asset ownership, asset management. But for a business owner, for an executive, for a high earner, insurance, lending, estate planning, financial planning. If you're very fortunate in life, family governance. How are you going to handle a significant wealth event with your family? How are you going to plan to pass that to the next generation? And what are going to be the rules around that? It can also be help with qualified retirement plans. A lot of mid-sized businesses, when they go from, say, a $5 million company to a $50 million company, there's a lot of growth there. Their 401k plan might move to a point where it needs to be audited. We can help with all that. So that's a quick. There's more than that, but that's a good snippet, I think.
And so I suppose in many cases, your best clients or clients that have the most need, maybe we should say, are those that are planning for an exit and probably planning well in advance. So, if a listener is in that situation where they're a business owner and they're kind of contemplating an exit, but they already have a relationship in place, maybe they've got an investment advisor, insurance firm, or some alternative investments in place, some other advisors. Why would they consider working with a wealth manager such as yourself when they're contemplating, a sale of their business and they have other service providers?
Yeah, so I think it's pretty simple. First off, I would say that it never hurts to get a second opinion. We're not in the business of hard selling people on our services. Typically, our services will sell themselves, and typically where we gain clients is value add, and they'll see that. But I would say the one thing that should be a red flag is if they have an advisor that does not have experience with planning an exit for a client, then they should consider talking to some other people. Because it's one thing to be on the receiving end of a bunch of assets and say, oh, I've helped plan for an exit. It's another thing to actually have done the footwork, the groundwork with the estate attorneys, the CPAs, all the things that kind of value add into getting the client from point A to point B. And we're very fortunate at Morgan Stanley. We have a internal resource that's called our Family Office Resources Group. And this is actually a team of attorneys and CPAs and people who have done this for many, many, many years for all different types of families across the country. And so they're a great resource for us. And what we do is we typically will set up a call or a conference, and we have the Family Office Resource Group involved with the client CPA, their attorney. We don't write the documents for the client. We just share knowledge about what can and can't be done, and advantages and disadvantages to different structures.
Okay, that's great. Now, there is probably a formal definition of family office. I'll probably butcher it a little bit, but for our listeners' sake, a family office is an entity that exists to manage the affairs of a high net worth family. And as complicated as that can be, when you talk about the Family Office Resource Group at Morgan Stanley, are they working exclusively with designated family offices, or could they just be wealthy individuals and their families? What, maybe just elaborate a little bit on what those folks do in advance of a transaction.
Yeah, so I would say everybody that starts a family office starts out as a wealthy individual. So the answer to that question is yes. I think what happens over time is um, more money, more problems, right? So if you think about it from you start as this individual or family that's had this significant or is going to have this significant wealth event, there is a kind of a metamorphosis that takes place, a process. And one part of it is your liquid assets you invest here in Morgan Stanley. But there's a whole nother aspect of it, which is, governance. How are you going to govern? If you're going to hire external professionals, are you going to outsource that? What's your structure going to be? Our Family Office Resource Group, not only do they have the resources, we pay for research that pulls down information from family offices all across the country, all across the world, and we can share that with our clients so they can be benchmarking internally. So what I would say to answer your question directly is it depends. Yes, it can start at the individual level and it can be actually much smaller than you think. I think the entry point was when you start having an estate problem, that's when you want to get them involved, and then up from there.
Yeah, that's very helpful, and that makes sense. And that's a good trigger, a good benchmark or hurdle for people to be thinking about is when you
We
start
should all
thinking you
be
have
so
might
lucky.
right, exactly. So a lot of service providers, experts that I speak with on this podcast, um, that serve the ecosystem of middle market mergers and acquisitions and entrepreneurs, owners of mid-sized businesses. Those service providers often focus by industry. Do you guys do that? Would there be a reason for you to do that?
No, we don't. I would say our industry, our focus is business owners, executives, and wealthy families, right? Um, one of the nice things about getting a master's in business is you get to learn a lot about different industries. So I've yet to come across industry where I can't grasp the things that I need to understand about the industry, or I think ask the right questions. And of course, I'm always interested in learning something new. The personal wealth transaction aspect of it, though, tends to be pretty similar across industries. And so I would say again that our focus is really those business owners, executives, and wealthy families.
And it's worthwhile noting that we were introduced a few months ago through a private equity group based in
Yeah.
Northern Virginia, where we both live. So we both sort of are in the same circles in terms of private equity and M&A. So how does a firm like yours, how does Morgan Stanley, how does your specific group differentiate? I imagine it's tough. I imagine you're in a fairly competitive field with a lot of folks trying to tout their wisdom or their stock picking expertise, but there's a lot more to it than that, right?
Yeah, I think that's easy. I think it's service, right? I think a lot of people in this industry, or even outside this industry, think it's about the best fund or asset management, and I think that's foolish. To be honest with you, our business is about relationships. If a wealth advisor tells you that they always pick the best stocks or funds, honestly, you should really think about what they're telling you because, as we all know, I don't care if you're a private equity investor or a business owner, we don't always make the right decisions. Nobody does. And I think the worst part about that is it can cause irreparable harm down the road. It causes distrust between the advisor and the client. And so, really, again, we focus on the service and we focus on putting in place a plan. And that plan and that service helps create the value for the client. So, the value might be the service. They don't worry about their everyday banking needs or how they're going to fund their lifestyle, or it might be the planning aspect where we're helping them walk through that process of exit on the personal side so they can focus on maximizing the value of their business, which they're very good at already. Um, and I think that's how we differentiate.
Well, you had said something when we spoke earlier about combating people's natural human behavioral biases, and it really boils down to a prospect of yours must invest a tremendous amount of trust in you, an individual that they may have been referred to, right? Um, but that must be a difficult bridge to build. That the suddenly someone that they've been introduced to is in charge of, or what's the right way to put it, has the ability to influence dramatically some significant aspects of wealth. How do you deal with that? And what maybe elaborate on that point about combating natural human behavioral biases? I wrote that down.
Yeah, so let's address the trust issue first. Our business, I say this very often, our business, we are trust driven business, meaning the product that I think clients buy from a reputable wealth manager or a reputable financial advisor are the product of trust. If you don't have trust in your relationship, there are so many things that can go wrong. I think trust comes from honesty and knowledge base, right? So, for instance, you were talking about building that trust. Let's take your example of somebody who already has a relationship, and that's a difficult situation we face many times. But what we typically find is that when we bring the knowledge to the table and we show them what we can do, how we can help them, and how our service differentiates. That's the first leg, right? And then the second leg of that is we do what we say we're going to do. We deliver on the deliverables. It's not different from any other business in that respect. And that builds a trust relationship. And the other thing is assets are transportable. Clients can leave us at any time. But so we really believe that that service and that trust, those things kind of go together. And then as far as behavioral biases, one of our biggest jobs as advisors is we have to help clients combat their own individual biases. And that could be the recency bias of we're going to stay in the market because things have been good, and we're going to say, well, you don't need to be in, right? You're way past your goal. We've had a great year. We need to stick with our plan. But if you don't have trust, that conversation is completely eradicated. It doesn't work because they think that you're telling them. So we try to build from a foundation of knowledge, trust, and doing what we say we're going to do. So we kind of get that feedback cycle of having a great relationship.
Yeah.
And
I was just going to say, sounds like consulting. I mean, I've spent my entire career as a
yeah,
consultant. Sometimes you have to tell your client things they don't want to hear, and you have to let the facts demonstrate why your opinion is not just opinion. It's grounded in fact and reality.
it's actually, Kip, that's actually a really great way to think about it. I mean, as far as our business, as the clients get wealthier, it does become more of a consulting based relationship. And I would say, kind of as the old saying goes, if your friend always tells you you're right, they're probably not that great of a friend. I would say if your consultant or your wealth manager tells you you're always right, they're probably not that great at consulting or wealth management.
Yeah, and just out of curiosity, when I started my own business more than 20 years ago. That business is called Aclaro Growth Partners, aclaropartners.com if you want to check that out. And that business didn't take very long for we'll just categorize them generally, the wealth management community to find me. And at the time, there were an awful lot of phone calls that would come in, so I got pretty good at screening those. And the calls still come, although they seem to be fewer and further between. And then I get things in the mail. I get invitations to dinners and so on and so forth. What do you do? How do you find new prospects, new leads?
Yeah, I mean, we are basically at this point referral only. We have a minimum that we work with. Um, Typically we want to have 1 million or more in investable assets, but we will consider situations of emerging wealth, which is, maybe a non-traditional situation where the business owner's wealth is tied up in their business, and obviously they're getting ready to go through an exit. That's a situation we see frequently. But we do hold client appreciation events, and we ask our clients if they want to invite friends who might benefit from talking to us or working from us. But we're not in the cold calling area anymore. Trust me, I did my fair share of that, and it was fun. It taught me a lot of things. I tell people all the time, you can be scared of it, but it teaches you how to talk to people on the phone. You learn a lot from it, and so I wouldn't go back and take that away. But no, we don't do that anymore.
Yep. Okay. So I'm wondering whether there is an example that you could share with our listeners of how you demonstrated value for a client, like literally out of thin air in a way that they wouldn't have anticipated or expected. Um, you know, how can you demonstrate value or return on investment or return on time,
Yeah, yeah,
return on experience?
yeah.
Is there an example you can share?
Yeah. Well, I have to be careful what I say regarding or share regarding actual client situations, but I can give an example that closely resembles something done for a client of Morgan Stanley. So let's use an example. Let's say a client owns a business and they're thinking about selling that business. It's a private business, right? They received a valuation that year, let's say for 50 million. The owner's happy, but they think, with some work with their executives and maybe some recruiters, they can up the sales, they can improve the margins, and they think that they can move the business from that valuation to maybe 3 or 4x that in say 3 to 5 years. Um, at that point in time, right, that is a crucial moment for planning. And the reason that's a crucial moment is you're about to create more value. And if your business is already worth $50 million, and assuming you're married, you're already over the estate tax limit. Okay, so basically, the estate tax limit is 24 million roughly for a married couple. If you're not married, it's roughly 12 million. Okay, so at that time of sale, they're looking at estate taxes being paid at the first valuation of roughly 40% on that additional 26 million, right? Big tax
The
bill.
difference between the 50 and the 24.
That's exactly right. And so in this case, if the business owner is the sole owner, and let's say that they do get to that 150, $200 million, proceeds and sale, they're looking at an estate tax bill on something like 150 to 175 million, right? That's a big number, right? So, however, if they do some planning in advance, right, they could significantly reduce that liability. And we have helped people do this before. So, if you start working with your CPA, your attorney, and us, there are ways that we can assist in solving that problem. And that is a major problem that people see in exit because, of course, they put all their money, their time, their effort into that business, and then it reaches this valuation level. And actually, the same thing I would mention for private equity folks as well, because they would own a piece of a business, right? And they do that exact same thing. Their piece might be demonstrably smaller, but if they're already near that level from other places that they've accumulated wealth and they get there and they're trying to make sure they're not paying more in estate taxes, this strategy can work for them as well.
Yeah, that's great. That's a good example. And as you said earlier, given the team that you have behind you, it's a collaborative decision making process that involves people with different skill sets and background and so forth. So let's say hypothetically, well, maybe we'll use me as an example. I'm a business owner. When is the right time for a business owner or senior executive to reach out to somebody like yourself? Is it the point that you start thinking about the implications of an exit? Is there a good time?
Yeah, I would say, I think anytime a business owner is curious, it's great to have a conversation, right? Because if you know the business has value, um, we just talked about an estate planning problem, but I think there are other places we add value. Insurance planning for executives and business owners, 401k. As I said, when you move from one level to the next, are you at the right place? A lot of people don't realize they have liability as the operator of their 401k plan, and so we can help with that. So I think any time that you have a question is a good time to work out, but definitely what you just said. If you are thinking about exiting, yes, talk to some professionals that have experience. It will save you a lot of heartache in the end. You don't want to find out later that you could have saved all that money.
Yep. Yeah, it's really all about strategy and planning ahead and kind of getting all the ducks in a row well in advance. We see that in many different dimensions in the work that we do in value creation and exit planning from the standpoint of a strategy consulting firm. So I get it. So how do you define success?
Well, I've got 4 kids. I'm really lucky, and I have a great family, and I've been very fortunate in this business. As I said, I started at Morgan Stanley with nothing, right? I mean, we had no clients, so I've been very fortunate in that I've created a great client base. I have a ton of great clients and great relationships. Um, at a certain point, I think you start to define success less by financial measures and more by the quality of the relationships you have. And that's a big factor for us in working with clients. We want to work with people we can have quality relationships with. And so, for me, I don't know. I think we're successful and we're doing well and I'm having fun. I mean, that's that's success, right?
That's good. What age range are your children, if I could ask?
Yeah, my oldest is 8, my middle daughter is 6, and my twins are 4. So,
Oh, That's right. I forgot. You have twins.
Yeah.
That's even more work. Wow, fun.
Yeah.
So, we only have time for a couple more questions, but I'll let you decide which direction we go in. Challenges that you're facing, opportunities, dreams and passions, and then we've got one last question that I definitely want to ask you, which, by the way, has to do with how our listeners can reach out to you and engage with you. But challenges, opportunities, dreams, ambitions.
Um, Challenges. Let's talk about that one. I think in the industry, there's a lot of it's competitive, you know, and I think that sometimes that makes it hard to combat things that people hear out there about, maybe wealth management or what we do or the services we offer. But I think as I would, try to be a positive, like every challenge has an opportunity. And so we think that's true. We think when you spend more time with your clients and you help them understand and that, they prosper and they do well because of your services, we think that that is kind of the key to success and the key to where we're going. And then I think, goals, we don't necessarily want to grow our client base. We want more great clients, like we don't need a new client. We want a great client. And that I think is what our goal is if we can have more great clients, if we can help people more when they're going through these, I guess, more interesting, more difficult situations, that would be a goal of ours.
That's great. That's good. So I'm going to give you an opportunity to put out a little commercial for yourself. Sentinel Oak Group, Morgan Stanley. How do people reach out to you? How do they find you?
Yeah, so you can go if you just Google us, the Morgan Stanley the Sentinel Oak Group. You can find our website. You can reach out to us. You can email me, or you can call in. My line's listed on the website, so it's fairly easy to find us on the World Wide Web. And we're happy to have a conversation if you think it's appropriate.
Richard Jollon, thank you. It's been a pleasure. And for our listeners, thank you. Thanks for listening. This is the Strategic Growth Council. It's a podcast about growing your business intentionally in a disciplined way, or acquisitions, mergers and acquisitions as well. So thanks for listening, and give us a like.
This podcast was produced by Heartcast Media.